Good afternoon, Robert Scribbler. It is August 15th, 2018. Thank you for joining me for another climate change and clean energy video blog. Now, for this segment, I am going to talk about some major successes by Tesla, an all-clean energy company in North America that continues to break new ground both in electrical vehicles and in energy storage. A company which also produces solar energy, which is a clean energy-based generation system. We're also going to talk a little bit about some of the controversy that is surrounding Tesla, and Tesla appears to be a magnet for controversy. In my opinion, this is primarily due to the fact that Tesla's business model, Tesla's all-clean energy business model threatens a number of legacy industries, primarily fossil fuel-based industries. And we're going to talk also a little bit about some potential for fossil fuel money defections to clean energy. But for the first part of this story, I want to talk about another major battery contract that has recently been won by Tesla in Australia. Tesla is apparently contracted to build 20 megawatts worth of battery storage for the Lake Bonny wind farm in Australia. And this is in addition to its 100 megawatt energy storage system in South Australia, which broke new records both for profitability and efficiency in grid stabilization. Batteries are very effective for grid stabilization due to the fact that they are rapidly deployable, and that the energy from batteries can hit grids in as many, as few as tenths of a second. So it often takes much longer for a peaker plant to spin up and deliver electricity to the grid, whereas battery storage can deliver electricity practically instantaneously. So another major project for Tesla battery storage in Australia, which is certainly good news. Now, moving over to electrical vehicle production. Yesterday, I had noted that Tesla was producing about an average of 4,000 Model 3s per week and 6,000 Model 3, Model S, and Model X electrical vehicles per week. Well, just looking at Bloomberg's Tesla Model 3 tracker, it appears that 4,000 weekly average production has been increased now to approximately 5,000 weekly production, maybe a little less, but if you're counting in the last 4 weeks. But it appears that Tesla is on track to produce closer to an average of 5,000 Model 3s per week for the month of August. And this would put total Tesla electrical vehicle production in the range of 7,000 vehicles per week, which extrapolated to an annual basis would be 350,000 electrical vehicles per year. And that's likely the highest rate of electrical vehicle production for any electrical vehicle-based automaker. So more indicators that Tesla is running ahead of the pack of electrical vehicle producers with the Model 3, which was Tesla's plan in the first place. And it's also worth noting that Tesla has yet to produce its base Model 3 for $35,000, and this production of base Model 3 is predicted for the end of this year or start of next year. And once that happens, it's likely that we're going to see this rate of weekly Tesla production rise again as demand also increases. Now, I want to talk a little bit about some of the decisions surrounding Tesla's potential to go private, and one of those, one of the supporters for Tesla going private appears to be Saudi Arabia's sovereign wealth fund. Now, Saudi Arabia is in a bit of a tough position because it looks like the world may potentially start to reduce demand for oil by the early to mid 2020s through a massive wave of electrical vehicle production. And so Saudi's sovereign wealth fund is looking for ways to hedge that risk. And one way is to invest in clean energy companies. Now, this is a wise decision for a number of reasons, not only for hedging Saudi Arabia's risk to its oil investments, but also for investing in a clean energy future and steering away from the kind of climate change that would hit Saudi Arabia really hard. Saudi Arabia is sitting right in a zone where global temperatures are predicted to increase to points that are very difficult to function in. And so with Saudi Arabia right there in the bullseye of human-caused climate change when it comes to potential habitability risks for regions around the Persian Gulf, movement to supporting clean energy is a wise choice for the long run. Now, of course, you tend to get a lot of negative spin or a lot of negative opinion based on the fact that Saudi Arabia is has traditionally been an oil industry supporter. But those of us who are clean energy advocates, our primary criticism of the fossil fuel industry and those who invest in fossil fuels is that they have lobbied against climate change solutions and they have not moved their money into clean energy. And if Saudi Arabia is going to move a substantial portion of its money, of its investment capital, into supporting the production of electrical vehicles, then that's a win, a cautious win for those of us who are clean energy advocates. Now, of course, we wouldn't want oil money to start trying to choke off the supply of electrical vehicles or wind and solar, or exerting influence on Tesla, say, for example, to slow down its ambitions for clean energy growth. But those kinds of conspiracy theories have not yet emerged, and with Saudi taking about a 5% stake in Tesla, this does not appear to be a rational risk at this time. Now, if Saudi were to take a larger stake and then subsequently start to try and influence Tesla in a negative fashion with regards to clean energy, then that would be something that we would be concerned about. But at present, this just looks like an investment in clean energy to hedge oil risks. And for those who are fossil fuel investors, those of us who are clean energy advocates want them to shift their money from oil, gas, and coal and into things like wind, solar, and electrical vehicles. So far, this looks like a big win. So hopefully that will remain the case. So just an overview of the present situation. Thank you for joining me, and I'll be chatting with you soon.